All right, guys, bang, bang. Super excited to have Jeff here. Thanks for doing this, man.
Pomp, great to be on your show.
Absolutely. Let's start with your background. Obviously, you spent a bunch of time covering various industries, but kind of where'd you grow up and what did you do before you got to Fortune?
I grew up in Vancouver, Canada. Used to be a lawyer. My joke was got tired of being unpopular, so I picked the only profession maybe less popular than lawyers as a journalist. But no, it's been fun. I've been at Fortune for 5 years. Also worked at Reuters, and I've written for most major publications. I got into crypto. It's a fun story. In 2013 in New York City, in Union Square, there's a thing for a while called Satoshi Square, where it was crazy. It was like crypto anarchists and old school Bitcoin folks, and then Wall Street traders would meet up and basically sell Bitcoin like in the open air with stacks of Benjamins. And I went to cover that, and that kind of whetted my interest in it. Never since then, I've been covering crypto on and off. Of course, there's the peaks and the valleys, but I've watched the scene the whole time. And please say, I recently wrote a book about it called Kings of Crypto that tells the history of Bitcoin and the crypto industry, but through the vehicle of Coinbase, just how they became players. And the big focus is on how Wall Street and Silicon Valley are coming together.
Yeah. So, what was the impetus for moving from being a lawyer to a journalist? Because I think a lot of people would say there's not tons and tons of people who go from that field to journalism. But what kind of was the interest there?
I guess I like writing, and that's, I like telling stories and writing. And as a lawyer, you do a lot of writing, but it's very, it's kind of joyless. It's like writing extended, car manuals, 30, 60 page fact, and not a lot of fun. And also, I think I was working on as a law clerk, I was working on a pharmaceutical patent trial. This went on for 10 days, and it was just like ready to shoot myself. It was just so dull. Same thing day in, day out. And then with journalism, you get to talk to everyone. I've met everyone in crypto. You get to hear their stories. You get to write something new every day, which is a lot of fun and feels real rewarding.
Yeah, that's awesome. And so then how did you first hear about the Satoshi Circle, right? Where people were doing this? I feel like that's a kind of an underground type thing that they weren't exactly running advertisements on television for. So where'd that come from?
Probably Twitter, like everything else in crypto. I just heard about it, and then I reached out to a couple people, and I have to confess how ignorant I was at the time. I'd planned to go, I bought a Bitcoin to go there because I thought there'd be people selling stuff like, muffins or t-shirts or something. And, I thought that's what Satoshi Square was. And so I, bought a Bitcoin from Coinbase for like $70. And I planned to expense it. And, I'm happy to say I forgot to. And it's one of those rare times it turned out well because I don't own any other crypto because I want to keep, impartial as a journalist, but that was a bit of good fortune.
Yeah. And then, so when you got there, what was everyone doing if they weren't selling muffins and t-shirts? Were they just kind of sitting around and talking about Bitcoin, or what was it?
Yeah, there was like Wall Street guys in $5,000 suits coming up with like stacks of hundreds. I'm not kidding, man. Just like buying, from these like dreadlock dudes, and they all had a passion for crypto, and they all had like their own wallets. And these guys were, really knew the tech and really knew the economics of it. How they were determining price, I don't know. I think they were just checking the internet, and they were buying and selling Bitcoin in the open air. It's kind of cool.
And so this is probably what, like 2012, 2013, if it was down around $70, somewhere in that time frame?
Yep, good memory. 2013, some point in May or the summer, and it was just this corner of Union Square in New York that was every Monday. It was called Satoshi Square. I think similar things popped up elsewhere, but it was kind of cool to even if I was totally ignorant, it was kind of cool to take it in.
Yeah, for sure. And then I guess as part of that, like Coinbase, I think if I remember correctly, 2013 or 2014 was it came around. So really, it's almost like they were doing this out of necessity because there wasn't great US-based infrastructure to go ahead and buy Bitcoin. Is that generally right?
Yeah, that's the sort of the thesis I put in the start of my book. Peter Thiel, the famous investor, wrote his book 0 to 1, and he talks about open secrets. Those things in retrospect are so obvious, like, why don't you start a company to use your phone to hail cars, rather than relying on taxis? Why don't we create a, internet distributed system to rent, spare rooms in our houses? Airbnb, Uber. In retrospect, so obvious. And I know Brian Armstrong's thesis was like, what if we made Bitcoin easy to buy? And there's a lot of obstacles to that, both technical ones, but also cultural. And to this day, I think a lot of the crypto community takes pride in how tech savvy they are. But the reality is most people just are not that good at that or that interested in it. So making it easy was critical. I think that's how they did what they did. And both then and now, it's also got a lot of resentment from real, what so-called real crypto people who, people still taunt Coinbase, not your coins, not your keys. And I get it, but the reality is, 90% of people who own crypto weren't going to get there in the first place unless you make it easy.
Yeah, and I guess in those early days of crypto, you've done tons and tons of work. Were you able to actually talk to Brian and Fred, and were they made available for the book, or did you have to kind of do this without their participation?
No, I was lucky because since I've covered Coinbase since its inception. So I, known Brian Armstrong for years, and that makes it sort of easier. And then fortunately, they, for one reason or another, they decided to play ball. I didn't, this isn't like an, authorized biography. Because to put it clearly, a lot of people talk a lot of shit in the book about Coinbase, and I relay it. I report what I found, but I was lucky to have access to Brian, to Fred, Olaf Carlson Wee, real character, really knows his crypto, and it was really interesting. Like startups, at a certain point, any big company is kind of the same. They're big and bureaucratic and so on, but startups are just the energy and the personalities are really interesting. So it was neat peeling back the curtain of the early days there.
Yeah, and so I guess let's talk about that, right? Because I think a lot of people forget, especially people who are coming into crypto now. You've got Brian and Fred as two of the co-founders. Olaf's obviously one of the first employees, or I think he might have even been the first employee. These guys have all gone on to kind of run different things that are leaders in their specific niches of the crypto space. And so, like, what were those early days like? As you're talking to them and talking to others in the space, like, help us understand like what's going on in the early days of Coinbase.
Yeah, I guess what struck me is how hard these guys worked. I guess that's just the world of startups, but they were really like working 18 hours a day. It was Brian, there's a bit of intrigue at the start because he was a Y Combinator company. And, Sam Altman, the founder of Y Combinator, told me that their model is they want co-founders because building a startup's too much work on their own. But when at the outset, Wired reported this years ago, it's a guy named Ben Reeves, sort of a old crypto guy, started blockchain. He and Brian entered Y Combinator as co-founders, but right on the cusp of starting, someone at Y Combinator whispered in Brian's ear, "Hey, you got to cut this guy loose," because there was an ideological division. Because Ben Reeves was like, "We can't, have a semi-centralized service. It's got to be," and then, but Brian was like, "Look, the whole point's making it easy, and we're, so basically." He booted his co-founder with the complicity of Y Combinator at the outset, built it up. But the reality is, he needed someone else. And a few months later, Fred Urson was a Goldman Sachs trader who got disillusioned by how technologically stupid Goldman was, moved to the West Coast, and just met Brian on Reddit. And then the two of them just busted their ass building it. Olaf Carlson Wee, who of course now runs Polychain, he was a freaking lumberjack. He's sort of a character. He was working in the state of Washington like as a lumberjack, and he was really into Bitcoin. And he turned up in San Francisco and said, "Hey guys, can I work for you?" And that's how they started. Real sort of synergy there. They added another engineer named Greg Hamill, and then Charlie Lee, who of course is famous for Litecoin, and that was the original team. And there's something about when you have people who mesh like that and work hard together, and that's I think how they launched it.
Yeah, and I guess it's really interesting when you think through not only that small team, but there's some irony in Brian Armstrong and Fred coming together, given Fred's background from Wall Street, which is that there's definitely a ideological divide, like you described, where not only do you get inside of crypto, but crypto is an ideological divide from the traditional Wall Street, right? And so to see somebody cross over like that so early and go build infrastructure there, did Fred kind of give any insight into, I'm assuming his former co-workers thought he was crazy and kind of the classical story, or were they more encouraging and really wanted to see him kind of go for this?
No, he was disillusioned because he was, in Goldman, and he was a trader, but he had a real, he's got a real talent for software. And obviously he realized where, this was, I think, when would this be, like, 2012, 2013, where there would have been the last of the floor traders, and the culture of those firms is like liar's poker. It's, kind of like big athletic dudes who, shout each other down in a pit. Whereas, all the while, the guys who could build algos were, coming in. But, Fred was describing how the Goldman people disdained, the computerized traders, treated them as the IT staff. And, he just saw where the future was going, in his words, but obviously he's turned out to be right. And so that led him to leave. And it's funny. So apparently his coworkers were like, haha, what's that? Or, I don't know if he knew he was going to do crypto, but when he got into Coinbase, he went to his former manager, the one guy who did get tech, and was like, hey, do you want to buy an early chunk of Coinbase for $25,000? And, obviously that guy's sitting very pretty right now.
Yeah. And so there's this famous photo of Brian Armstrong, and I forget where it is, but it's in the early days of Coinbase. He's got a Coinbase shirt on, if I remember correctly. It's basically at like a job fair or some sort of event, and he's literally like handing out T-shirts. And I remember asking somebody about it, and I don't want to say who it is, but they basically were like, yeah, people forget that at one point Coinbase didn't really take off at first. And there was talk of potentially even like, should they shut it down? Right? Because it actually wasn't working. And then it kind of really took off. And so kind of how, when you were writing the book, like how did you think about the various phases of the company and kind of that, hard work overlaid with this, just the psychological toll it takes on a founder working on something that not only is just hard to build a company, but it's also in this industry that kind of sort of existed, but not a lot of people really recognized it, in 2014 and things like that.
Yeah, I mean, that's a great point, Pomp, because that's startup life. Most of them fail, but they were in a whole industry. You didn't even know if the whole industry was going to make it. So that's even more existential. Yeah, it's the peaks and valleys of crypto. 2013, it went on a bit of a run, and I can't remember what the prices got up to, but then it collapsed entirely again. I think it was like that's where it sort of nudged $1,000. In the early days, it went from $30 to $2, but in the next uptick, I think it was 2013, hit almost 1,000, and then the floor fell out. And yeah, talking there, they had their venture funding by then, so they could ride it out. But I do know in the first crypto winter in 2014, people confided in me that they drew up a plan to can 40% of their staff because they always wanted to keep a 2-year runway. And then, just as happens ever so often, then the prices started ticking up again, and they were able to hold on. So it's it's a series of events like that, and I think it's true to this day. You'll have these massive frenzies of trading and all the exchanges, make a bunch of money, and then things go really quiet, and things shut down, things get acquired, people get laid off. But here we are again.
Yeah, and another player that came from Coinbase and now has gone on to do other really impressive things is Adam White. And I know that there's some stories about Adam in the book. So maybe kind of share one or two of the really interesting things that Adam went through while working at Coinbase.
Yeah, Adam White's one of the good guys in crypto. He's just a really stand-up dude. I think sort of has no enemies and worked really hard. Interesting story too. He was a fighter. He's a fighter pilot in the Air Force, and so he served his country and then went to come back to Harvard Business School. Took him to and he's so humble. He admitted it took him 2 tries to get in. He got rejected. He wrote and rewrote his application, got in, and around then he got into Bitcoin. And it's sort of funny that he tried to write about this at Harvard Business School, and they're like, no, this is fringe, this is flaky. So, and this is complete self-promotion. I think it's awesome. My book's coming out in print. It's out in audio right now, but it'll be out in print in December, and the publisher is Harvard Business Review. So it just sort of shows how far things come. But Adam, yeah, he was basically the sales guy. He busts his ass to go and get people to sign up to take merchants, and his challenge was, Fred Urson told him, sign up like $10 billion companies, and he did, which is amazing. But unfortunately, as we learned, that never was Bitcoin's game, because remember there was this time where everyone thought, oh, people are going to pay with Bitcoin, merchants want Bitcoin, and so he signed all these people up, but then obviously not much came of that. But my favorite story with Adam is later in the game, and sort of around, I think, 2016 around there, when things were taking off. Brian Armstrong, Coinbase, sent him as an emissary to New York, because he's kind of a like button down. So, he looks the part. He looks like a banker. And he's like, go get some of these like old school, firms on board. So he gets a meeting with Cantor Fitzgerald, which, is sort of as like classic Wall Street as you can get. We're talking like scotch and three-piece suits and steakhouses. And, so he goes to meet, he gets the meeting and he shows up on his own. And the CEO of Cantor Fitzgerald comes with like 10 guys, and Adam has no tie on. And his title was like general manager. And they start mocking him, saying like, what's a general manager? You gonna get my coffee? And he basically got laughed out of the room, And I think that's less a reflection of Adam than it is just the prejudice of Wall Street, not only against crypto, but against West Coast culture, and that's something I think, the crypto community is reconciling with right now. Silicon Valley and Wall Street are very different places. They're coming together, but, just look how people dress in the Valley, look how they dress in Wall Street. And, culture is a big part of companies, a big part of industries, and that's what we're seeing right now.
Yeah, it's really interesting, kind of that difference in culture, specifically between those two places. You mentioned the dress, but I think also in kind of the way that companies are built, right? Wall Street, very kind of fundamentally driven. They want to see cash flow and all that fundamental analysis. In Silicon Valley, it's very binary. Hey, we know that, some high percentage of these companies are going out of business, but the ones that make it are going to be incredibly valuable. And I see it in a day-to-day, right? I mean, literally you will see kind of the Silicon Valley mindset, but it's overlaid with you're building in the financial industry, right? For all intents and purposes. And so there's this undercurrent of the Wall Street way, if you will. And in the book, as you're writing it, like, I'm assuming you saw that clash over and over and over again. And it wasn't just kind of Adam White going into Cantor and getting, berated. But were there other situations where you kind of saw that come to a head as Coinbase was being built?
Oh yeah, many times. I mean, the move fast and break things ethos of the Valley. That's well and good, but it doesn't work in most industries. And we're talking about the country's banking system. You can't play that way. And that affected sort of the cultural clashes with regulators, but also from an infrastructure point of view. I'm above my pay grade here, but the tools they use to build it. It's like what's the famous database thing, MongoDB and tools like that are the kind of go-to building blocks for spinning up an app in Silicon Valley just are not strong enough to, withstand like, billions of financial transactions. So, the tech stack, like in 2017 for Coinbase almost came crumbling down because they built it on Silicon Valley architecture. And, again, Pomp, you and probably your crowd knows this stuff better than me, but the technological infrastructure you need to build something like JP Morgan is got to be really solid and capable of massive throughput. And Coinbase got burned in late 2017 because their infrastructure almost fell down. And so that's that's not so much a cultural thing, but it kind of is the approach is to how you build. Silicon Valley, you build fast, you stand up, you pivot, you experiment. But when you're talking about Wall Street, you got to build, very deliberately and make it to last.
For sure. And I guess it's not only just Silicon Valley versus Wall Street, right? I know another kind of theme of crypto is it's much more global than most industries, right? I've got kind of this mental framework where a lot of companies, especially technology-wise, they were built in the United States previously. They would penetrate the U.S. market. And then there was almost like a board meeting. It was like, okay, this year is our global expansion, right? And then they would kind of go out globally. Now these companies are being built on one, not even being based in New York or San Francisco, but also on top of that, they're global on day one, right? They don't kind of have this geographic region by geographic region kind of, rollout plan, if you will. And so kind of, how do you think that plays into Coinbase being based in San Francisco, but the industry being much more decentralized to some degree?
Yeah, that's a really great question because, you're right. Typically, you build here and then you go market by market. But when you've got, people like CZ who stood up Binance in a few months and, he runs circles around Coinbase, and that's not entirely Coinbase's fault, but, so much of the crypto industry's fate is determined by regulation. And, in the US, it's been pretty heavy-handed, and so Coinbase had to make a choice to win the U.S. or win the world, but it also made them complacent because I think there is a bit of an American arrogance. Talk to some sources in the book, but even when Coinbase went to China and Asia, they were, talking to the people who built in Asia. They thought like Brian and Fred were extremely arrogant. They're like, look, you want to compete? Come try win in, China and Japan, before you tell us what to do. So that's, I think, really interesting. And then but the reality now is, Binance, they've done amazing things, but if you're hopscotching from Malta to Hong Kong to wherever they are now, last I heard, CZ was planning to go to international waters and run the whole thing from a yacht. I think it's cool, but and if you're going to operate in the U.S., as much as crypto folks like being cowboys, you can't blow off, the Treasury Department. You can't blow off the IRS. So, that could hurt America, from a competitive point of view in the long term. But that's the reality that, that startups and crypto companies face. You got to play the game.
Do you think that makes an argument that the regulators or the regulation should change, or there should be some kind of maybe even not like a full change, but like a sandbox where innovation can be tried, or something done from a regulation standpoint that allows for the U.S. to not fall behind from an innovation standpoint? Or do you feel like it's just, hey, they're so true to kind of that way that's never going to change, and U.S. companies are just going to have to figure out how to compete with their hands kind of tied behind their back in some regard?
Yeah, I mean, I don't know. I think, you and probably a lot of your audience are closer to those questions than me, but as a reporter watching this, I certainly do feel that American crypto companies are being hampered. It's improving a bit. I mean, I think the regimes, they're trying to set up a sandbox regime in Wyoming, which sounds great. Brian Brooks, Coinbase's former lawyer, becoming, the, controller of the currency, that's promising. But also, I think people underestimate the lobbying clout of of the banking industry in DC. If they want to shut something down, they will. So, but fortunately, as much as because I know I've got a piece in the book about Brian Armstrong going to DC because they tried to get him on the lobbying circuit. He hated it. He's like, he told somebody, I think that Democrat senator's an ass, and I can't stand any of this because Silicon Valley guys, they want to build, they don't want to do that. But the industry's got to grow up, and that's just kind of how American capitalism works, for better or worse. So, I think as the industry gets more entrenched, their lobbying in Washington chops will get better. I mean, that's what Google and Facebook did. Once upon a time, they refused to go to Washington. Now they're there again, for better or worse. That's just how the American game's played.
Yeah. So Coinbase was obviously Bitcoin only for a long time, right? And then started to add other assets. Anything that was memorable as people kind of talked about the strategy evolving from Bitcoin only to other assets, and now they're even doing things around staking and custody and kind of moving outside of just help you buy Bitcoin, which sounds like that was the original mission. Kind of any takeaways there?
Yeah, I mean, Coinbase was caught flat-footed. I mean, that's part of the reason they got so beat by Binance for a while. And, it's the reason people like Olaf and Fred Ursum, left the company. They want to spread their wings. And there's a period in 2015, 16 where this Bitcoin got so bitter between the block size debate. Remember people wanted to expand it to 2 megabytes and all that. And so much the energy was consumed in politics and backstabbing and fighting that, meanwhile, all that was going on in the Bitcoin world. And then what Vitalik was building, it seemed suddenly very positive, it seemed, full of potential. So, Fred wrote a sort of a famous blog post saying, hey, this is the future. And he left to pursue it. And Coinbase just dragged their feet, adding Ethereum, adding anything. Part of that was for regulatory reasons, to be fair, but part of it was inertia. They got complacent. And then it happened again when Binance started adding every token under the sun. There was a talk in Coinbase, people were advocating, look, let's split the company in two. We'll have an international holding company that can go play in, in all those markets and do the crazy stuff, and an American company, which they probably should have done. But then part of it was cultural. I mean, Olaf was saying, they had such a good 2017. They're like, oh, well, what should we do to maximize our tax advantage rather than building, they lost touch with the pulse of the crypto community. People were like, hey, let's add Dogecoin, which would have been an easy lift. And they're like, well, we don't know about the, ROI on that. And, but that's when they brought Balaji in, and he, Balaji Srinivasan is pretty famous for a variety of reasons in crypto world. And he really injected some energy and was just like, hell-bent on adding tokens. And that's, I think, how they managed to get their ass in gear again.
Yeah. So maybe talk a little bit more. Balaji came in through the earn.com acquisition and became the CTO. I recently had him on for an episode, and we spent almost zero time talking about Coinbase, and spent most of the time talking about all of the crazy, powerful ideas he has. But in terms of that acquisition, if I remember correctly, that was the first big acquisition that they did, where it was kind of a 9-figure sum attached to it, reportedly. Was that specifically for kind of a change in strategy, or what was kind of the driving force behind, rather than building everything internally, to go out and buy a company like that?
Balaji's a hard figure to report on. I've only met him a couple times. He's incredibly polarizing and divisive. However, what everyone agrees with is he's a genius. He's one of the sort of smartest people in crypto and in general. So the account of, getting earn.com, some people related to me that it was a dog of a company. And since Andreessen Horowitz had a big stake in that, and Coinbase was a way to solve that problem. And a lot of people whispered in my ear that the official price, the 9 figures, whatever it was, wasn't actually true, but it was to satisfy Balaji's ego. I don't take a position on that. That's what a lot of people were whispering in my ear. However, Balaji did do the job in really kind of changing up the culture at Coinbase, and the downside was it resulted in a civil war. I mean, he pushed Adam White out. He pushed a lot of people out. As someone called him Coinbase's first brilliant asshole. Other people said he would win Survivor. I don't take a position on any of this. I don't know Balaji well enough. I do think he's got formidable intelligence, that's for sure. And then ultimately, it became a showdown in Coinbase between Asif Herji, their COO and president for a while, who was making the company more corporate. And so, which had to be done. Asif did a lot of good things. He sort of made it into a mature company. But at the same time, the rank and file in Coinbase didn't like him because he wasn't a real crypto guy. And they all worshiped Balaji because Balaji could code, he knew tokens, he knew the scene, he was of it. So, and ultimately, it came to a head where there's, kind of a big bloody count, and then Coinbase lost a lot of people. And I think it forced Brian Armstrong to come in and lead because, Brian does not like conflict, but sometimes if your lieutenants are in a shooting war, you got to step in and do something. And the final straw was, I guess, Asif asked Brian to report to him on product. And Brian owns the majority of the company and is a CEO, and that was a bridge too far. And so that's when, he got pushed out. And then Balaji, on his 1-year vesting period, he pieced out, and that was that.
Yeah. Asif obviously used to run TD Ameritrade, right? So kind of came from a much more kind of Wall Street type background. And I guess part of this is not even just Coinbase, but most companies, as they go through what I'll just call growing pains, right? There's positives, negatives, and you're trying to build something that's worth billions and billions of dollars, right? So obviously it's going to be hard to do. Would you say that most people kind of understand that it was important to have that period where Balaji came in and had an impact? It was important to have the period where Asif came in and had an impact. And like those moments, although maybe painful at the time, have kind of built Coinbase and the culture it has into today? Or do you feel like there's kind of certain points in the history of Coinbase where those that are left point back and say, hey, we wish we could have skipped over certain periods, or we wouldn't have made certain decisions in the past that we actually ended up making?
No, I think that's a good way to look at the bigger picture. I mean, I think people in a startup going through something like that think they're the only one it's happened to. But even if you step back and he's like, look, the reality in the valley is a company gets that big that quickly, the executive team is going to turn over 2 or 3 times. So you're going to have moments like this. And then you've had the hidden hand of Andreessen the whole way too. I think Chris Dixon and Fred Wilson of, Union Square Ventures and Barry Schulman, you got these real smart, veterans who've been kind of, the hidden hand shaping the path. So, I think while it makes good newspaper copy and, salacious book gossip, I don't know if it's that different from what goes on at, any successful tech company that scales quickly.
Yeah, elaborate a little bit more on the venture capitalists, right? You just rattled off 3 names that are at firms that have now become very well known, not only one for just investing in general, but obviously for crypto specifically. How do you think about their impact on Coinbase, right? I'm assuming Coinbase couldn't become Coinbase without them, but how involved are they or were they? And any kind of insight there as to their involvement?
Yeah, I mean, I think they've had a huge hand in guiding it. Mark Andreessen, Chris Dixon, Fred Wilson, they're kind of the rabbis behind the scenes. That doesn't take, I don't mean to diminish credit to Brian and Fred, who, busted their ass to build the company, but it's kind of, symbiotic in the sense that, for the crypto industry, Coinbase is too big to fail. I mean, if Coinbase collapsed, I think, it would set crypto back a decade. So I think, that's why maybe it's got more attention or from the VCs than other firms. I'm not saying, Coinbase is the best or the only firm. Kraken does good things. Binance has been amazing. Even Gemini, there's, a lot of good crypto players out there, but, if you want to put the face of crypto out there, it's Coinbase. And if Coinbase went south, I think the ripple effects would be disastrous for the industry.
Yeah. And when you say go south, is that from a business model standpoint? Is that more of like a custody security hack type standpoint? Maybe it's both. Like how do you think about the downside case or the risk that's associated with a company like Coinbase being as big as it is?
Well, I mean, I think they're, probably safe by now. I mean, in the final chapter of my book, I talk about a clandestine meeting between Brian Armstrong and JP Morgan's CEO, Jamie Dimon. And why I love this so much is, of course, Dimon is, Bitcoin's most famous antagonist. He's called it, every name in the book, a fraud, and insulted it. And then meanwhile, he's taking this secret meeting with Brian Armstrong, in the, in JP Morgan's Manhattan headquarters. So, I think that sort of shows that, Coinbase is here to stay. In terms of moments that could have sunk them, a fatal hack, the industry barely survived Mt. Gox. Something like that befell Coinbase, because you got to remember, most American crypto owners, that's what they know crypto as. I mean, I think people who come on your show, the people who are running the funds and building it, they're all like, that's child's play. But for most Americans, or a lot of other consumers in the world, that's their touchstone. So if there's a disastrous hack at Coinbase, it would sink them. Could still happen, I guess. But I do recount in my book an early hacking incident. Coinbase likes to say it's never been hacked. That's not true. In the early stage, when there's just 5 of them, one of their vendors got in and got into the hot wallet and quickly stole $250,000. And after that, Coinbase issued only custom Chromebooks to anyone working with them and tightened their security. And then also, forgive me, I can't remember the guy's name. Starts with A. He's a very famous figure in crypto who's, Anthopoulos, something like that.
Andreas Anthopoulos. Yep.
Thank you. Yep. They hired him to go and test their cold storage and to do a complete audit to make sure every Bitcoin they had was indeed there. Because remember what happened with Mt. Gox. Karplus was sitting there. He thought he had it. And then when he looked, it wasn't there. So Anthopoulos verified it was there. So I think getting by that, getting through the IRS audit, and, so I think that's, and then their other existential point was when Silicon Valley Bank gave them the boot, which is very bad because Fred Ursum ill-advisedly put up a PowerPoint explaining how Bitcoin, could skirt sanctions. He wasn't advising it, and he's kind of right, because it's decentralized, but you don't go around making presentations like that. And Silicon Valley Bank finally had enough and booted them, and that's a big deal. I know it really pissed off Chris Dixon and stuff, and at least they gave him a 6-month grace period to find another banker. But if that could have sunk them too. But I think at this point, Coinbase they might lose market share, someone else might come along, but I think they've really kind of become the face of the industry.
Yeah, and so you mentioned Brian and Jamie Dimon meeting. We recently saw in the news that JP Morgan is now banking both Coinbase and Gemini. Is that meeting kind of leading to that, or was there other conversation that you're aware of as part of, I love the word clandestine that you use.
Yeah, it's funny because, I learned it happened and everyone's like, I was trying to get, JP Morgan to confirm, and they, were sort of skittish about it and stuff. Yeah, I think because Brian did a East Coast tour, met with Lloyd Blankfein at Goldman Sachs and Jamie Dimon. And I think it was both sort of he's, being an evangelical for crypto, but also I think he, wants to learn from these guys who, whatever you think of the traditional finance industry, I mean, Blankfein and Dimon are formidable financial executives. And I think it was a little bit, to come sit at their feet and learn what they have to say. And no doubt that probably was the first step to lay the groundwork for what was reported last week of, JP Morgan taking on Coinbase as a banking customer.
Yeah, that's awesome. So let's look forward. Obviously, Coinbase today, and I probably should caveat this entire conversation. We have some exposure to Coinbase financially. We're not direct investors in the company, but basically we've invested in somebody who's invested in the company. But where do they go from here, right? In terms of it's an $8+ billion company based on public reports, but do they continue to stay private forever? Do they have aspirations to go public? Do they tokenize the company's equity? I think one time Brian said something about, that would be like the most Coinbase thing to do. Kind of what's the conversation around the company from that standpoint?
Yeah, well, insiders told me the plan was to go public this year, but like everything else in the pandemic, if life is on hold, but unlike so many other unicorns, I mean, they are, profitable most quarters, so they can. And I think you put your finger on it. The question is not, if or when, it's how. And I talked to Fred Ursum recently and, asked him this, like, what's it going to look like? Are you going to do a blockchain token? And he said, yeah, it'd be pretty boring if we just did a conventional NASDAQ IPO. And I think there's so many people, because they are, a lot of people hate Coinbase, but they're the industry leader. They're the standard bearer for the industry. So I think it would be very brutally disappointing if they just did something boring. So I think it's just how much, how quickly they can get the regulatory ducks in a row. And, what I hear in the company is they want to do some hybrid listing of, they'll float some shares like normal, but also put a bunch of those on a token and do, sort of a ICO meets IPO. And I can't wait to see the details. And that's what they hope to do. But who knows? I mean, maybe their investors will get impatient and just push them out the door. But I think the crypto world's really hoping for a Coinbase token.
Yeah, and it's interesting too, because I wonder if there's a day where we see a Coinbase equity token trading on Coinbase, right? Which kind of leads to the question of they historically have listed assets that are not securities. And I think that's, as you mentioned, kind of part of that underwriting process and really kind of trying to stand the right side of the regulators. Does the company eventually end up listing kind of commodities, currencies, and securities all in this digital format, all in one location? Or how do you think that kind of plays out based on the conversations you've had?
Yeah, that's prescient. I mean, I think you're looking into the future, and that's what the future is going to be. I think we're going to see Nike and Apple stock and other equities, traded as tokens, because it just makes so much sense. It's so much more efficient. It's more secure. Who will be doing that? I don't know. Possibly Coinbase, but we could also see, the big broker. We could see Intercontinental Exchange trying to buy Gemini or Coinbase, and see a period where we have hybrid share listings for a while. But I think no doubt, I don't know what your guess is. I'd say maybe within 10 years we'll see that.
Yeah, look, I personally, my personal opinion is that we will see stocks, bonds, currencies, and commodities all digitized, right? Kind of the technology layer will be the same. And it just generally makes sense. We're kind of seeing this, right? If you take some of the companies we see that are focused on like millennial investing and things like that, they're trying to put various asset classes together on the same platform. That's a little bit different, but still directionally getting towards where you could buy Bitcoin, buy a stock, or buy something else all in one location. It just seems that's the way the future is going to play out, but I don't know, right?
Yeah, I mean, technology is inevitable. Remember we had the internet and we realized things were going to go digital, and logically it should happen the next year. In some industries, it took them 20 years. And, but I just can't see going backwards. This stuff just makes so much sense. But who's going to do it? I don't know. Will Coinbase morph into become the, New York Stock Exchange of the future? Will they get acquired? And then also the other people big in this game is, Facebook with their Libra token. I think it's inevitable that Apple and Amazon are going to start tokenizing stuff too. And government, central banks. It's kind of a jump ball out there. But I think you're absolutely right. All this is going to happen, but who's going to pull it off first? I don't know.
Yeah, in I think it was 2017, maybe I tweeted and I said, look, within the next 24 months, we're going to get large companies start to issue these tokens. And my guess was actually Tesla and Amazon. Tesla having like some sort of energy credit for the grid, right? So you actually have some incentive mechanism that's used there. And then Amazon, just from the idea that a gift card is basically a token. Right. I mean, yeah, it's a different technology form factor. And so you can easily see kind of this happening. But I do think that it's happened slower than people have thought. Right. It was kind of like in 17, everything looked like it was going to happen, within 24 months. Now it's probably pushed out a little ways.
Well, I mean, someone's got to build the interface. The problem with it, I don't want to insult the crypto community, but I think they're so in love with their own technology, their own culture. There's been a lag in building, I mean, even with DeFi stuff, I try to cover it. And I mean, theoretically, it's so cool, but I mean, you want me to get a, browser add-on and MetaMask and all the rest of it. And I mean, give me a break. This stuff has got to be, an app. It's got to be easy to use as any other app on my phone. And that's where I think the big corporates could have a role. I think Amazon, Tesla, yes, given their unique corporate culture, could do that. But, I mean, we need those user interfaces. And it seems a lot of crypto sometimes is insiders impressing each other with who can build the most, kind of out there, technically sophisticated product. And we got to remember, most people, the stuff is just too hard. You got to build it so it's accessible. The UI is so crucial. And, I think, you got to build the plumbing first, and that's what's going on. But, who's going to crack the code and make this mainstream accessible? I don't know. Could be Coinbase, could be Tesla, could be Amazon, could be Apple, could be Facebook, or some incumbent or some startup out there who's going to solve this all. But I can't wait to see how it turns out.
Yeah. I mean, look, Coinbase, Gemini, I think part of what's made those companies so successful, right, is they've basically made it look very similar to other brokerage type products, right? And so if you're used to kind of buying financial assets on a platform, you now can do it here, and they make it look and feel very user friendly. But then you also have things like Cash App, right, that are just stupid simple, and they're kind of pulling other people in. I wonder what other trends, kind of going away from Coinbase to finish up, and you've covered crypto for a while now, and obviously seen everything from the early days to now. What are the other trends that are interesting to you? You mentioned DeFi, but are there other things that just kind of stick out to you or that you're paying attention to?
Just as an aside, you mentioned Cash App. Square, I was talking to a VC recently who just described it as a beast. And Dorsey's interest in crypto and the infrastructure they're building, it's subtle, but I mean, they've got a giant banking network, so they're ones to watch. That would be really neat if they push the crypto ball forward. I could see them doing that for sure. Otherwise, I think the thing to watch right now is what comes out of the crisis. We've seen with the, attempts to deliver funds to businesses, and within the last crisis in 2008, 2009, we saw legislation that enabled the whole fintech industry to take off, the PayPals and things like that. So I'm watching to see if the lawmakers are smart enough to do something to facilitate how things are going to change. I think the way we pay is changing. Like I'm Canadian. I'm surprised that the U.S. still doesn't, have contactless payments. Canada's had that for years. Everywhere else, Asia's miles ahead. And it might take this health crisis to get people to stop swiping credit cards. So I'm curious. A lot of the innovations in the rest of the world is going to come into America, and I'm always surprised about how cultural payment is. Just people pay very differently in Northern Europe and in Asia and Canada and America. So and obviously crypto is going to have a role to play in that as well. I'm watching Facebook closely, because I think that notion of, I know a lot of people hate it because it's centralized, it's not real crypto. That's true, but I think the more people get familiar with this, with tokens, with fungible wallets, let's just get everyone on the platform and then educate them about having their own hardware wallet and stuff. So sorry, that's kind of a stream of consciousness answer, but that's some of the things I'm looking at. And finally, central banks too. I think are they going to, are we going to see, is China going to pull this off? Can you do it without turning it into a surveillance mechanism? I think that's going to be a big story in the next couple of years.
So the only thing I'm going to correct you on is Jack, if you listen to this, is scoffing because he would say he's into Bitcoin, not crypto. But I other than that, I definitely agree that they specifically have this unique place in the market where they've got the connectivity to kind of the legacy system. And then when you've got the leader of the company who is so kind of hell-bent on Bitcoin and kind of its future prospects, that you just don't see that anywhere else, right?
Yeah, and what if you strapped it to, to Twitter? Why not building a payment network? And as someone in the media, it drives me crazy that Apple and Google with Chrome and Safari don't build in a crypto token so that you come across one of my articles, there's a paywall. What if there's a little button you could just say, pay $1, and use crypto tokens to do that? I mean, the technology, it's just, it's so obviously, that it would be useful to deploy it this way. It's just someone's got to step up and lead. Maybe it's Jack, maybe it's Zuckerberg, maybe it's Brian Armstrong, but it's going to happen. I don't know how soon, but it's going to happen.
Yeah, and then I guess what are the areas? Everything you mentioned on the trend side is very kind of positive looking. What are the areas where you say, other than the user experience, these are the big obstacles that crypto has to overcome in the next kind of 5 to 10 years?
I think they got to build something someone needs. I mean, as a reporter, I mean, these pitches I get, like these, I don't mean to, pick on some companies, but like Definity raised $100 million for World Computer that's going to change everything. It's like, okay, where is it? And I think it's just a structural model, a traditional startup. You've got to like build, you got to get customers, you got to get revenue, you got to scrape to get to your Series A and your Series B. The crypto model's flawed because it's like, okay, here's $100 million, go build it. And guess what? A lot of these people, it's a lot more fun to go and like fly around the world and go to conferences and do stuff like that than to grind, because there's not enough pressure to, to build the stuff. So I think the incentive model within crypto is very flawed. But we'll see what happens. So I think that's going to be a threat to it. And I think there's, people have got to start speaking plain English. Polkadot and Definity and all this is really interesting theoretically, and I'm in the world, so I kind of appreciate it. But they've got to make this stuff relatable to ordinary people.
Yeah, I think it's a great point. Where can people go find the book if they want to read more about it?
Well, thanks for asking, Pomp. Yeah, I mean, it's just if you want to learn about Coinbase and crypto, I think it'll have you covered. But also, it's a great story. I think there's a lot of gossip. I tell it narrative style, so it'll should fly by. If you go to Amazon Audible and Google Kings of Crypto, you can get it. They've got the exclusive rights for that for a few more months, and you can pre-order from Harvard Business Review. Again, to search Kings of Crypto, and you can order it up that way. So I hope people do, because it's a good story, and there's a lot of gossip in there about people you might know. So
that's awesome. Before I let you go, I always ask everyone 2 questions, and then you get to ask me one to finish up. What is the most important book you've ever read?
My goodness. Can you ask me the second one and I'll get back to you on that?
Second one's not much easier. Aliens, believer or non-believer?
That's easy. Non-believer. I love astronomy. I love the stars. No aliens out there.
No, wait, well, you got to explain that. Why no aliens? You're maybe the 5th person ever to say no aliens.
We would have heard from them.
Okay.
Yeah. Let's see, most important book I've read, and I'm probably supposed to say some business book, but I love fiction. So probably Crime and Punishment. It's just, the best detective story. It's the best piece of Russian literature ever written. And it's just exploring people's motives, souls, life, death, God, atheism. It's all in there. So, if you're stuck at home in the pandemic, read Crime and Punishment.
So I have not read that, but I did read Bill Browder's book. It is read. I'm going to forget the name now. It is read. I forget. But Bill Browder is the guy who he's an American investor, and he went to Russia, and Red Notice is his name, and they issue a red notice for him, and it's this whole kind of crime and drama book, and they end up killing his lawyer and doing all this crazy stuff. And I've heard a bunch, but I've never read the fiction, and so I wonder how accurate the fiction and the nonfiction line up there.
That sounds really good. I did think of a business book. It's not the most important one I read, but I listened to it recently. Shoe Dog by Phil Knight of Nike. Great book. You want to hear a guy struggling to build a company and just the footwear industry more interesting than you can possibly imagine. So if you want a good business book, pick up Shoe Dog. It's an old one, but a good one.
I always say that he made the right decision not calling it Blue Ribbon, right? So something about Nike just sounds better. What one question do you have for me to wrap this up?
Okay. How about the future of media? It's grim out there. Who's going to save media? The Atlantic just laid a bunch of people off. BuzzFeed's laying people off. How does the media business fix its business model so we can stay solvent?
Yeah. So I think there's 2 paths that are interesting. I don't know necessarily if these are the magic bullets, because I think that there's, in the legacy media world, you're going to see some actually get stronger, right, while some fail, and that's just the nature of kind of consolidation and things like that. But the 2 new paths that are really interesting to me, one is kind of the Substack model, where you say, look, people are going to subscribe to other people. They're not going to subscribe to the publication itself. And so you'll see that kind of continue to get built out. I think you'll continue to see journalists leave and kind of just say, hey, look, I want to write what I want to write. And it might be all kinds of weird stuff, not fitting under one publication. So, support me. So we'll see how that plays out. But then the other thing that I'm really interested in is kind of these very small, what I call internet first media companies, right? And so this is people who are doing this right now are people like Tim Pool, or if you look at somebody like David Pacman, or you see people like, what's his name, Ben Rubin, right? And all of these people, what they basically have done is they've recreated what it would be a traditional media company that has, tens of, if not hundreds of employees. And it's like them and a staff of 4 or 5, right? Joe Rogan's another example, right? Now Joe's doing video and audio, but it wouldn't be hard to see somebody in Joe Rogan's position just say, hey, look, we're going to hire one person to, create show notes and transcripts and put that online. And when you start to see that, you start to say, like, the media organizations are going to have the same disruption happen that you've seen in every other sector through technology. The big question is just, can they see it coming, right? So like New York Times is kind of the notorious one that, they've adopted some of this stuff and they're benefiting. Obviously Fortune's got their subscription services and they're kind of getting behind some of this. And so I think that's really going to ultimately depend, like, who wins and who doesn't. It's just, who's awake, right? And who's asleep at the wheel. So it'll be interesting to watch, but I also don't think it's going to happen overnight. Right. I think a lot of people think like tomorrow all these media companies are going to fail. I'm like, yeah, maybe, but it's more likely that it's kind of a slow death than it is just, everyone goes out of business all at once.
Yeah, that's astute. I mean, technology sort of determines so much, and media likes to think it's exempt, but it's going to shape our future. So, all right. Well, Pomp, thanks very much. Real pleasure to be on your show.
Absolutely. Well, listen, Jeff, I really appreciate it. And we'll talk soon.
Well, take care.